Hi, I'm Blaine Morris. Welcome to the Spring 2012 Fairfax Market Report. We'll also be doing a recap on the 2011 market season in Fairfax. So I've been doing a lot of thought about this over the course of the past week. The report was long, lots of numbers. I'm going to try and net it out for you as best I can today. We had a great year in Fairfax last year. The market was active the whole year long, and the number of sales were relatively flat. We had 75 single-family homes sell in Fairfax in 2011. That was basically flat. We had 73 the year before. The condo market was flat as well. 7 condos sold in Fairfax last year. That's the same number as the year before. Now, some of the news that was created was that the average and the median prices of Fairfax homes was down last year, and it was down an amount that was worth discussing. The average price of a home in Fairfax last year was $594,000. The median was $560,000. Now those numbers are respectively down about 11 and 9% from the year before. So why is that? We've had this flat market. If you talk to anybody who's been trying to buy a house in Fairfax for the last year and a half, the answer they will give you is there's nothing for sale. So I attribute the downturn in pricing, or downturn is not the right term, like-for-like houses sold for about the same price. Your home has been worth about the same in Fairfax, more or less, unless you're in some specific areas I'm going to talk about, but more or less for about the last 3 or 4 years. The bottom of the market was March, April of 2009, and some months were up, some months were down, but generally the prices have been the same month to month, and they've actually been creeping up a little bit recently. So why did prices overall decline last year? They were pretty much flat the year before. Well, the re-emergence of the hillside market is big news in Fairfax, and I think that's a big part of why the prices for the overall market went down. Now, homes in the hills have been almost unable to sell for the last few years. You couldn't even give them away. As recently as the first half of 2010, only 10% of the homes that were selling in Fairfax were hillside homes. Now, last year, the sales of hillside homes were up 63%, and that's pretty profound. About 43% of the entire market was hillside homes last year, and that's up substantially. As I said, 2010, in the first half of the year, only 10% of the homes were hillside homes. In the second half, and overall, about a quarter of the homes that sold were hillside homes. Then it's up to 43% in 2011. Now, why is that? Well, part of that is because there are no homes in the flats coming on the market. That's what everybody wants, but those people seem to be staying put. There's a notion I've been talking about the last couple of years, and that's life change decisions versus lifestyle choice decisions as it relates to home buying. Life changes are people getting married, people having babies, people's babies getting bigger. Those are life changes, and those have been largely driving the Fairfax and even the San Anselmo housing market the last few years. Those people, life goes on. Those people continue to buy homes, and they generally want a family-friendly home in the flats that you can have a yard and toss the ball around. Those are life changes. Lifestyle choices, i.e. up in the hills, place with a view, place with privacy. Lifestyle choices, people haven't been making lifestyle choices as it relates to housing in the last few years, but they are now. So those hillside homes are selling, but the hillside homes cost about 20% less than the homes in the flats. So we've got this larger percentage of hillside homes at a lower price point. The net of that is it has brought the overall average and median price in Fairfax down. Now again, your house that you're living in this year or your house that you're thinking of buying this year probably costs about the same as it did last year. I think that's important to know going forward. Another thing that's affected the prices of homes in Fairfax this past year, distressed sales. Now, we've been having distressed sales in Fairfax pretty consistently the last few years, a lower percentage, I might add, than Marin County in general and California certainly as well. But, last year we had 13 homes that were distressed sales versus 10 in 2010, and there were also 10 in 2009. So distressed homes represent about 17% of all the sales. Foreclosures were actually down from 6 to 5. Short sales were up from 4 to 8. Now, of these 13 distressed sales, I think it's important to note that 10 of them happened in the first half of last year. So only 3 after July 1st. So that market winding down. There's just not that many foreclosure homes for sale. Short sale market is winding down, so I actually think that market's going to be slowing down a little bit in Fairfax, and again, we're just not seeing as many of them. The flats have been white hot, as I said. If you've got a home that's nice with a yard and some sun in the flats in Fairfax, you can sell that house. And if it's in a great location, it's got great sun, new kitchen, nice updates, that house will sell for top dollar and you won't have any trouble selling it. So why didn't we sell more homes in Fairfax last year? Again, the sales were flat, but there's just a tremendous number of people that are trying to buy a home. As I said, if you talk to anybody trying to buy a home in Fairfax in the last year, the answer they will give you is there's nothing for sale. Very few family homes in the middle part of the market, the $600,000 to $900,000 segment of the market. Those are the move-up buyers. Those are the people that have kids whose kids have gotten bigger. There's just nothing coming on the market. Now, why is that? Well, the people that are, if you've got a nice house that you've done it up and it's got a great kitchen, great yard, you're probably not moving because you're looking around like everybody else and you're not seeing anything else for sale. So that market has kind of stagnated from the people that are moving up out of that market. Consequently, people that want to move up into that market, there's nothing to buy. So I think that's a big chunk of why we don't have anything coming on the market, and it has a pretty substantial effect on why we didn't sell more homes in Fairfax last year. The demand is there. Another factor is that debt limit fiasco, the debate we had last summer, that took a lot of wind out of the fall housing market. We usually have a second season Indian summer in Fairfax, and that was right after the debt limit fiasco, and a lot of the wind got taken out of the sales. Now that's largely waned, and people are feeling pretty good about things, but that did have an effect on why we didn't sell more homes in Fairfax last year. One more thing I want to talk about, and that's what I'm describing as the Zillow effect. Now, I partner with Zillow. Zillow is a wonderful resource. I've invested in them to help market myself and my business, but they are way out of whack in Fairfax. And if you talk to people, if you look at the value of your own home, generally across the market in Fairfax, the value that Zillow says your house is worth is generally $100,000 to $200,000 low. Why is that? Well, there's no comparable sales. There's no great houses that have been selling because of what I just talked about. So consequently, what's been selling are the distressed properties, or grandma just passed away, or something which causes a house to be, a great value for that person who buys it. But Zillow, in their voodoo algorithm, is using, some house foreclosure on the hill with a 25-year-old kitchen. They're comparing that to your beautiful redone home in the flats. And consequently, we've just got a market that Zillow is looking at is very depressed, and it's just not accurate. So if you're thinking that Zillow is showing your house is not worth as much as you think it is, call your realtor, give me a call. One of us can come over and tell you the real value of your house. Now, that is having, once again, an effect on how many homes sell in Fairfax. Reason being, if you get on Zillow, you want to see how much my house is worth. The Zillow tells you your house is worth $100,000 or $200,000 less than what you think it's worth. You're just going to close up your computer and you're going to come back next year versus pick up the phone and call your realtor to put your house on the market. So I think that's another factor that was a material item in the number of homes that sold in Fairfax last year. So the market is prime. There are people out there just banging on my door looking to try and buy a home in Fairfax. So have heart. Your home is worth more than you might think it is in Fairfax. The demand is certainly there. There's some wind at our back now. There's positive press. The national media and the local media is saying good things for the first time in the last 4 or 5 years about the real estate market. And don't discount the fact that we've got this beautiful new Good Earth market in Fairfax, which is having a wonderfully positive effect on everybody's perception of Fairfax and the desirability of Fairfax as a place to live. So Fairfax looks to have a good year in 2012. I've got more buyers looking for Fairfax than I've had in the last couple of years. So take heart. It's going to be a good year, and I wish all of you a healthy and prosperous 2012. Thanks for stopping by.